Hello, 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 everybody. Good evening, good afternoon, good day, wherever it is you are. Welcome, welcome, welcome to this episode of Immigration Yams. Yeah, okay, so today we have a very interesting topic and we will be talking about the Canada credit system. But again, I like to say that it is applicable to just about any Western country. Maybe a few changes, maybe a few differences, but ultimately the credit system works the same way. So, first of all, the first question you want to ask is what is a credit score? So, it's that three-digit number that determines or represents how likely somebody who wants to loan you money is to loan you that money. So, it's a three-digit number and typically ranges between 300 and 900. So yeah, it is that three-digit number that determines if they will give you the money or not. It's what says, oh, this person pays their bills on time, this person is credit worthy. Yes, we can loan them money. It has nothing to do with collateral. It has nothing to do with who your references are. Has nothing to do with but this is something that you own personally and says, okay, we will give you our money or not. That helps them to determine that. Okay, so let me quickly move forward. So credit system, I mean, it's that, like I said, it's that thing that determines whether an institution loans you money or not. And of course, that affects when you're trying to buy big things like houses, cars, if you want to take a loan for business, whatever it is that you need to loan money for, yeah, that credit score kind of like affects it. Okay. So as far as Canada is concerned, and this one, well, I don't know what obtains in another country, but as far as Canada is concerned, really, there are two bodies who kind of like govern the credit system, and it's Equifax and TransUnion. Yeah, Equifax and TransUnion. They're the two recognized, but two main bodies who sit on top of that credit score. So typically, all the banks, all the financial institutions, all the anywhere as far as they give you a credit card or as far as they do money lending or borrowing, they have to submit their data. They have to submit their database to TransUnion and Equifax. So yeah, that's kind of like what they're private owned, yeah, they're private companies, but they keep track of credits, they keep track of all spendings, how you pay your bills and all that. So yeah, those are the two main bodies who are allowed to do that, and those are the two who do that. So moving on, the question then will be, what constitutes as a good credit score? How do you, at what point do you say, oh yes, I have a fantastic credit score or I have a good credit score? What makes for that good credit score will be really typically anywhere between 660 and above. I mean 720, 900, 800 if you can achieve it. But yeah, typically anything from 660 to 660 to 720 is on the average. And of course, if you can go higher than that, then that's fine. You can absolutely go higher than that. Give me a minute. I'm trying to see, technology seems to be messing with me. Oh, okay, I'm good. Okay, so typically, that's when you say, oh, somebody have a good credit score between 660 and 724. If you have anything between 725 and 759, it is considered to be very good. It's considered to be very good. And then of course, when your credit score is above 760 is considered to be excellent. So anywhere between 660 and 724 means you're good, depending on how long your credit history is, right? And then of course, if you have anything between 725 and 759, it is considered to be very good. If your score is anywhere between 760 and above, then it is said that you have excellent credit score. I mean, if you can't do that, why not? Okay, so I just wanted to quickly mention who are the people who are allowed to pull your credit score. Who are the people that are typically allowed to see what your credit score looks like? Yeah, of course, the banks, any credit card company, typically financial institutions, any car leasing company, because I mean, you want to go lease a car from them or you want to go buy a car from them, retailers of some sort, depending on what you're buying. Like if you're buying something on credit, mobile phone companies, your landlord, yes, your landlord is allowed to pull your credit because, of course, they want to see that you can pay their rent on a regular basis, right? So, yeah, your landlord, your employers, if it comes to that, and then the government, of course, they can pull your record. Let me quickly say that. So, typically, when people want to pull your credit score, and I say typically, when everything is as it should be, right, you need to sign consent. I know that in some provinces, you don't have to have a written agreement, just like a verbal consent saying to you, oh, we're going to pull your credit, is enough for them to do a hard check. And I'm going to come to what a hard check and a soft check is. So, but in other provinces, you have to have a written agreement signed before anybody can pull your credit, a hard check on your credit score, because it affects it. Okay, so what's the difference between a soft check and a hard check? The soft check is like peripheral. It doesn't go like deep in, and it doesn't affect, they can't really see all your data. They can probably just see what your credit score looks like, but they can't see your credit history. They most likely will not be able to see where you have all other credit cards or anything like that. But yeah, so that soft check is peripheral, doesn't affect your credit score, doesn't really do anything. So it's just for somebody to see, oh, okay, I want to see what this person's credit score looks like. But when it comes to hard check, is like they're digging deep into your credit history to see, okay, what's your credit score? What's your history like? Do you have a history of defaulting? Do you make your payment on time? Are you owing, how many credit cards do you have? Are you owing people? That kind of thing. I mean, it kind of like goes deep in, and just for them to be able to evaluate, are we able to give this person the car or not? Are we able to give this person the loan or not? But yeah, that's kind of like the difference between the soft check and the hard check. Okay, so typically, if you like, you want to see your own credit score, like you want to know what your credit score looks like. Some banks have on their app that you can, for instance, I bank with CIBC, and on my bank app, I can see my credit score. So I don't have to go do like a difficult check. All I have to do is log into my app, and I'm able to see what my credit score, my present or current credit score looks like. But if you want to, like, I don't know, you just want to go check and say you don't bank with TIBC and you want to check, you can do Equifax themselves. Like you can go to the source. So you can go to Equifax and TransUnion. There's some of the features that is free. I believe checking your credit score is free, but if you need to dig deep into your credit like history and all of that, they have some paid features that you have to pay for. But yes, you can go to the source, and then you can also I think you can use Borrowwell. You can go to Borrowwell just to check, oh, okay, what is my credit score as at this time. It is usually updated like on a month to month basis. But yeah, so you can go there and just see, oh, where am I standing right now? What does my credit score look like? And then you see what it looks like, and then maybe you can put a plan together to improve on it if you need to improve on it. I'm gradually getting close to the very interesting part for me. So, let's say that you see your credit score, you're asking yourself, okay, how do I improve this credit score? And this is like very interesting for me. Again, like I said, because I mean, I've seen too many people who don't understand how their credit is calculated, or month to month the things they do, how it affects really the reports that they're seeing. So the first thing I would say is, if you come into Canada for as a newcomer and you open your bank account, get a credit card. I've heard people say, no, I don't want to buy anything on credit. I don't want to have anything to do with credit. No, it is a credit system. You literally cannot do anything without credit. Literally. It's okay at the point where you're buying groceries, you're paying cash, or you're using your debit card. It's okay at that level. You can get away with it. But when it comes to you want to buy a car, there's a level of car. I mean, like, if you want to buy a $50,000 car, for instance, they won't take cash from you. They are obligated to they are almost obligated to report it, right? So you have to use your credit. You can't you can't take a mortgage without having a credit history. So, especially if you come from the part of the world where I come from, where we typically don't buy things on credit, you have to have your money before you can buy things. And then you come here and you hear people say, no, 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 I don't want to have anything to do with credit. To permit me in my language, you say, if like, I don't want to owe anybody. No, you have to owe. That is the system. However, when you have that credit card, you need to understand your credit statement. So don't just go from, I don't want to owe anybody, to, oh, now I have credit and I'm going to spend everything. No. You have to understand your credit statement. And when you pull up your statement, one of the things you see is, of course, you see all your expenses. So let's say, okay, before I use that example, there are three dates that are important. Or there are three things that are important, no, four things that are important on your credit statement when you see it. First of all is your credit balance. You take a look at the credit balance, it shows you in this month or in this time period. It's usually month to month, but it doesn't run calendar month. So it's not like January, February, March. No. So usually you would have something like January 10th to February 10, or if your statement date, so I said there are four things you should pay attention to. First of all is your statement date. So, for instance, say your statement date is 10th of January. So that means that your statement runs from December 10 to January 10. Then you would have January 10 to February 10. February 10, I mean, it will run like that, date to date. So, again, like I said, you pay attention to your statement date, number one. Number two, pay attention to your balance, like your current balance. So let's say that January 10, your statement has come, your statement is ready. Typically, it will be ready maybe like the next day. So, like January 11, you will get a notification to say, oh, your statement is ready. So, you go look at your statement, you know, your statement date is 10th. That date signifies the day when you get a report of everything you have spent in the last 1 month. So you have that statement date, then you see your balance. Balance says, let's say for instance, your balance says $500. $500 meaning that is how much you are owing in the whole of January. And I say how much you're owing because a number of things could have happened in the month. Maybe on the first of, since it's December 10 to January 10. So let's say on the 11th of December, you went to buy groceries. You have 300, you bought groceries of $100. So let's say maybe the week after you bought groceries, you bought $90 groceries. That's 190. And then let's say that the week after you bought something else. I don't know, maybe shoes, maybe clothes, whatever it is. And now you're owing $400, right? You total that together. And then let's say maybe by December 31st, because it's end of the month, or somebody paid you some extra money, or you got a bonus or something, you say, oh, okay, let me put this $300 on my credit card. So you put the $300 on your credit card. By the time your statement is ready on the January 10, all your spendings versus all the money that you put on the credit card would have been subtracted. So what you see as that balance is actually how much you're owing on the credit card as at January 10th. Okay. I really, really hope that is clear enough. So it doesn't matter how much you have spent, it doesn't matter how much you have put on the card. In that time period, that your balance shows how much you're owing on your credit card. The third thing you should pay attention to is minimum balance, or minimum due, or minimum payment. Minimum payments meaning that of all the money that you're owing, this is how much you need to pay minimum to keep your credit, or to keep your account in good standing, not your credit. To keep your account in good standing, not your credit. They're two different things. So that minimum payment typically is usually maybe like $10 or $20. And in my opinion, it's a little deceptive for people, because you say, oh, I spent $500. My minimum payment is, let's say, $10. So I pay my $10. The question you should ask yourself is, the remaining $490, what happens to it? No, it doesn't magically disappear. It doesn't evaporate. You will pay it. Maybe you're not paying it now, but you will pay it. The bad thing about that is that then the interest rate. So let's say your balance was 500, minimum payment is $10, and then you pay your minimum payment, which is $10, right? You have 490 left. And let's say that your credit limit is 1,000. That's how much you have on that card. So now your balance is 500, you pay $10, which means that you're still owing 490. No, the money doesn't automatically evaporate. What happens is that the interest rate on your card, which for the most part, for a lot of credit card, there are a few exceptions, but for a lot of credit card is 19.99%. That interest rate kicks into action. So the 490 is transferred to the interest to say, look, you're owing us 490. You're not able to pay it now, so we will allow you pay it later, but you will pay it later at 19.99% interest rate per annum. Yeah, so the interest starts to climb on top of it, right? So the fourth thing you should pay attention to is your due date. Now, due date is usually like 21 days after your it's usually 21 days after your statement date. So your statement date is January 10, add 21 days to that, that becomes your due date. So they're saying, okay, you have 21 days to be able to make this payment. Now, if again, like I said, if you pay your minimum payment, which is $10, yeah, they say, oh, you're making payment on your card. But it is just like that oil that you use to keep servicing it. It doesn't really take care of the problem. Because don't forget, if your credit limit is 1,000, what it means is that that 490 that is remaining will be taken out of that 1,000. So technically speaking, in this new month now, you only have $510 to play with. So let's say you go and spend another $300 in this new month, and then by the time your statement comes out, now you're at 700 and something dollars. You only have $300 to play with, right? So that's how it keeps going. That's how it keeps going. For the due date, another thing I would say is, oh, well, maybe you don't know, but let me say, the day you put the money is not the day it gets posted. So you would see, like if you look at your maybe on your app or on your computer, you check your account, you would see pending transactions. So don't wait till the last minute to pay the money, because it will not reflect in that, like it won't reflect before the due date. And you need that money to have been posted before the due date. So don't wait. Don't wait till is 1 day to or 2 days to before you pay the money, so that it can reflect before the due date and it shows that you've actually paid your money, right? So those are the four major dates that you need to pay attention to. Is your statement date, it's the balance, your minimum payment. Honestly, I don't pay attention to the minimum payment personally. That might not be for you, but personally, I don't pay attention to my minimum payment. And the reason is because, first of all, I don't spend money that I don't have or that I will not have. I mean, so I'm working, I know how much I'm going to be earning, and I don't spend money that I don't have. So what anybody should typically do is make sure you're not spending money you don't have, budget, so that when your statement comes out, you already have the money, and 2-3 days after your statement is released, you can make your payment so that it meets up with your due date and you don't have the interest rate kicking up on your balance. Okay, so that's that. Let me move on to the next thing, how to improve your credit score. I think I kind of like already touched on this one. Pay your bills on time. Don't let it drag. Don't let the interest rate kick on it. Pay your bills on time. That is how to guarantee that your credit score will grow and grow in the right direction. Pay your bills on time. And don't apply for too many credit cards. So it is like, credit card is like money that you have in your pocket that you have not spent. They know there's a temptation to spend it. So let's say you have 4 credit cards that are $1,000 each. That is equal to $4,000 in your pocket that you have access to spend, even though you have not spent it. And the same applies if, let's say, your limit is 10,000 and you have 4 credit cards. That is $40,000 that you have the potential to spend, even though you have not spent. And they are aware that sometimes situations might warrant that you will spend it. So they count it all together. So they look at your income. And the question is, can you afford to maintain all these credit cards if it comes to that? It's one of the things that goes against you. So don't have too many credit cards because it counts, right? And then the other thing is, let's say that your credit card is limited to $1,000 and you've been doing good, you're paying your bills on time, you're doing what you should do, you're minding your business, you don't spend money you don't have, you're budgeting, you're doing everything right. And the bank say, "Oh, you've been a very good customer. We would like to increase your limits to 2,000." Don't say no. Or they say, "Oh, we see that you've been making accurate payments and we would like to offer you line of credit." Don't say no. Line of credit is a little different from credit card in that, number one, the interest rates are better. Number two is money that you typically can do anything with. Like, it's like a loan. It's like a quick loan. Nobody's asking you what you want to do with the loan. They're not asking you for collateral. They're not asking you for anything. As long as you've been in good standing with your payments with your bank and they see that your credit score is progressing, the banks themselves will come and offer it to you. Don't say no. You don't have to use it, but it is an arsenal. It is something you will have in your arsenal. It's a tool that you have there just in case you need it. So don't say no. When you say no, it kind of like counts against you. I don't know how, I don't know why, but don't say no. Okay. So yeah. So let's say that you've taken care of all of that. The last thing I would like to talk about is monitor your credit utilization. So typically, the rule of thumb is to not spend more than 35% of your credit limit. So let's say your credit limit is 1,000 in any given month. You try not to spend more than 350. It doesn't always work like that. Sometimes, some months, your bills are higher than another month. Sometimes you have a lot more bills to pay. Typically try to stay within 40%, but I mean, the rule of thumb is like 35%. Some months I don't even get to 35%, and some months I'm doing way above that. I mean, again, it depends. So let's say in a month you travel a lot and you have to fly. Of course, flight ticket costs money. Let's say in this, you are just moving into a new house, you want to buy this, you want to buy that, or just sometimes in a month you just have a lot more to do than other months. But again, like I said, don't spend money you don't have. Another beautiful thing about the credit system is it allows you to put money on your card. So let's say, for instance, my credit limit is 1,000 and I wanted to buy, let me see, maybe not a car is more than that. Let's say I wanted to buy a bed. Let's say that's not how much it costs, but let's say I wanted to buy a bed and the bed cost 1,005. Because I want to run everything through my credit card so that I can increase my credit score fast, I am allowed to put money on my credit card. So I can choose to say, okay, because I want to keep to the 35% rule, my credit limit is 1,000 and I want to buy this mattress and this mattress is 1,500. I am allowed to put money on my credit card. So I can go into my app and move money from my debit or my checking. We use checking. I can move money from my checking to my credit card. So I can say I can move 1,000 to my credit card. So now I have 2,000 on my credit to play with. I buy the mattress at 1,005. I've kind of like touched 50% because the $500 on top of it will come out of my credit card, and that means I've kind of like touched 50%. But that's still better than maxing out your credit card and you don't have anything to play with. Okay, maxing out your credit card is the ultimate red alert that says you cannot be trusted with money. You are completely dependent on credit card. You should never ever max out your credit card, like ever. So, like I said, if you wanted to buy something that is above the budget that you have set for yourself, simply put some extra money on that credit card before you buy whatever it is you need to buy or spend whatever it is you need to spend. That way, you're credible. The system reads you as somebody who isn't completely dependent on the credit. And it's so funny that the less of the credits that you spend or the more they see is like when you see that this person doesn't really care about also, okay, let's see what we can use to lure her in. Like almost wanted to say like a guy trying to ask a girl out, and she's like, I'm busy, I don't have time. You're like, come and hang out with me now. That's kind of like the way it works. So yes, you spend their money, you spend a little, you need to build your credit, but there's a how to do it. It's not just spending everything, maxing out your credit card, and then you now start paying little on it. No, that is ultimately terrible. It is just terrible. So try not to max out your credit card. Pay attention to your dates, the due date. You should, like, your due date, your statement date and your due date should be ringing in your head. Like, you should know when to make your payment so that you're not caught unawares and so that the interest rate is not starting to climb in. So know your dates, know your statement dates, know what your balance looks like, know what your due date is. Know what your due date is. You don't even want to joke with that. Know what your due date is so you know when to make payments on your credit card. Pay your bills on time. Don't max out your credit card. Try to keep to the 35% rule so that you're just safe, you're credible. And if they offer you more credit, please don't say no. It will be a completely different thing if you know you're terrible with credit, then you should be accountable, help yourself, and don't take the money, right? But if you have everything under control, then don't say no to that increase. Again, because sometimes things will happen that you actually need that money for, and that's not the time to go and apply for it. Okay. That's all I have on credit system. If you have any questions, please, please, please send us a DM. I do not see any question in the comment section. So please send us a DM if you have a question. I will gladly. So I see, can you request for more money? Yes, you can request. However, you requesting for it doesn't exactly put you in a good light. So the way it works is, again, like I said, if you have 1,000 limit and you've been very consistent, so they do a check. The minimum time that you can increase your credit limit is like 6 months. So say if I increased my limit in January, I cannot increase it, or they will not increase it until June or maybe July. But they have their own checks. So they do regular checks to see whoever it is that has been very good with their credit, and they would just maybe call you to say, oh, we're just doing, in fact, so I have a bank card, I have a bank credit card, and then I have a store card. You, in the minimum, I say have two cards, one bank card, one store card. My store, they don't ask me. They will send me an email, and they will send me a mail, like paper mail, like a letter saying, okay, we have looked at your credit in the last 6 months and we would like to increase your credit limit. If you want it, you can respond. There are two ways. Yeah, you can respond to the mail, you can respond to the email. So, but they will typically come to you, especially if you have been making your payments on time. And that's why I said pay attention to your due date. I've seen people who they just pay money whenever they have the money. You see, the problem with that is sometimes you pay money before your statement. By the time your statement is ready, it does not, that money you have paid does not count for you. Because let's say in the month you have spent $1,000 and you have made a payment of $600. As far as you are concerned, or no, let me even say it in a ridiculous way. Let's say that your limit is 1,000 and you have spent in the month, you spent $600 and you paid $580. So maybe somebody just dashed you money, like, or maybe your salary came in, your pay came in, and you're like, oh, let me just quickly pay money on this my credit card. So you pay 580. I'm just using this ridiculous example. The day your statement comes out, your statement shows that you are owing $20, right? And you don't make any payment until your due date has passed. The system will record that you didn't make payment on your credit card. I know. Sounds ridiculous, but very true. So sometimes I see people make, and I've had two people that I've had to sit down with and talk to them about their due date. You just make payment on your card. No, 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 no. Don't do that. Because you don't know. It might not fall within the time that you are supposed to make that payment. It will count against you. So the system will record that you're not making payment on your card. Meanwhile, you actually just paid 580 out of 600. Exactly. So you need to pay attention to that statement date and your due date. So I said, wait until your statement comes out before you make payment. You will be their best friend ever. Ever. I had to apply for something for my business recently. And the lady at the banker, she's like, you've never missed a payment. I'm like, no, I don't miss my payment. I don't want to miss my payment. Because when you want to buy a house, you want to buy a car, you want to do big deals, you want to go buy big things, they will bring out your credit history. Have you been consistent with your payments? Do you miss your due date? The things you don't pay attention to right now, it will stand against you if you don't know. So I hope I answered that question. So yes, you can ask for that increase in your limit, especially if you've been above 6 months. But I advise not to. If they see you've been in good standing, they will call you by themselves to say, we would like to increase your limit. So yeah, that's it. If you have any more questions, please feel free, send us a DM. I'm always available to answer questions. And if we need to come and answer a question, we will definitely do that. But that will be all I have right now for credit system and how it works in Canada. And yes, this also, the statement date, due date, it also applies for US and it applies for UK. So please take advantage of this information. Do not be caught unawares. The minute you need that credit score is not the time to build it. That is not the time to work on it. Now is the time. As you go about your day to day, that is the time to work on your credit system. Oh, yes, absolutely. So let me read the question. It says, if you have multiple credit cards and you default on one of them, would it affect your credit score on the other credit cards? It will not affect your score on other credit cards because individual credit cards don't have scores. Your credit score is a total of what you do with all your cards, your line of credit, your mortgage. So it's like all the debt you are owing in this life, all of that contributes to your credit score. So it doesn't affect your credit score on other credit cards because individual credit cards don't have scores. It affects your credit score, simple. So your credit score is calculated based on the summary of what you have done on all your cards, all your debts, all your credits. Let me put it that way. So, like I said, there are like I don't know if you missed that in the beginning. There are two bodies that governs the credit score, the credit system in Canada. It's Equifax and TransUnion. All the banks, all the financial institutions, the car leasing companies, anybody who gives you credit reports to them. They are obligated to report to them your activities. I hope that's sank in. So the banks, the financial institution, all any credit card company, they are mandatorily obligated. It is a law. They have to report to Equifax and TransUnion. Their system is integrated to each other. So it's not like they sit down at the end of the month, they now put a report together. No. They have like a unified database. So as you go about your day-to-day business, I mean, they're just reading your database. So, but they are obligated to report. So the minute any bank gives you a credit card, they report to TransUnion to say this person has a. In fact, they don't even have to report. When you request for the credit card, they have to do a check on you, and they are going to check with TransUnion to say this person is asking us for a credit card. So when the credit card goes through, like if you go to TransUnion, for instance, and you request for your credit history, you will be able to see all your credit history. This bank, the credit card you have there and the limit. This bank, the credit card you have there and the limit. If you have line of credit, it will show up. If you have a mortgage, it will show up. If you anything that you have that is credit, it will show up on that credit history. That is your own what's the word I'm looking for? That's your identity. That's your credit identity. So if you default on any of your credit cards, it affects your credit identity and it shows up in the place of your credit score. So your credit score is how they determine, oh, is this person a good credit person? Are you fair? And again, like I said, maybe you missed that in the beginning. Credit score usually ranges between 300 and 900. It's a minimum of 300, highest of 900. So anywhere between 660 and 724, it is said that you have good credit. 725 to maybe 749, you have very good. Anything from 750 and above, it says that you have excellent credit scores. So um it doesn't affect other credit card, it affects your credit identity and it shows up in your credit score. So they put all your credit cards together, put all your credit together, and then they judge what your credit score looks like based on all of that information. Yeah, that's it. If there's any other question, I have about 2 minutes before I log out. And then, but again, like I said, send us a DM, and we will take your questions. And if you need somebody to sit with you like a one-on-one session, please reach out and we can organize that. We can definitely work on that. Until next time, I will see you next week. Same time, 8 p.m., and we will have another juicy topic to talk about. Bye for now.